Since the global financial crisis, the Chinese economy has become an increasingly important locomotive for the world economy. But what we're seeing is the development of some significant economic imbalances in China in the recent past. In particular, the very rapid expansion in credit that took place in 2009 and 2010 has created problems in the shadow banking sector. And we're also seeing signs of very significant increases in the property market with fears that there could be a property bubble building. I think in the central case, we expect the Chinese economy to still be able to work through these difficulties and grow at a pace of about 8% this year. And this will provide quite an important support for the global economy and for the rest of Asia. However, of course, if the Chinese economy were to falter, this has very serious negative implications for the world economy and particularly for many emerging Asian economies, which are increasingly interlinked with the Chinese economy, which is the second largest in the world. The Chinese economy faces a number of risks in relation to a hard landing. In particular, we're very concerned about the rapid increase in the size of the shadow banking sector, and that has highlighted a number of fragilities in the financial system during the last 2 years or so, and this has clearly become a big source of concern to the Chinese financial regulators as well. Another increasing area of concern is the rapid increase in Chinese property prices. A lot of Chinese investors are pumping money into the property sector, and this creates risks that there could be a property bubble building up, which could burst in the future with significant negative transmission effects to the overall Chinese economy. And another big concern is if the export sector of the Chinese economy were to suffer due to an external shock from the rest of the world, in particular if the US or the EU were to go back into recession. This would create a very negative shock to the Chinese export economy. So these are the sort of risks which could come together to create a hard landing in China. And we put the probability of a hard landing in China over the next 3 or 4 years at round about 20%. Nevertheless, these fragilities are of considerable concern, and the implications of what a hard landing would mean to the rest of Asia have become more and more significant. I think if we look at these different hard landing scenarios, the likelihood of an external shock to the export sector has somewhat diminished over the last 12 months because of the recovery that we're seeing in the US, and now the EU is also showing some improvement after having been in recession for 2 years. So this is giving a little bit more of an underpinning to the Chinese export sector. However, what is very concerning is the rapid expansion in the size of the shadow banking sector. The Chinese financial authorities are very concerned about that, and they seem to be struggling to find solutions to curb the expansion of shadow banking. And property prices are continuing to grow at a relatively rapid rate. And this is continuing to indicate that there could be trouble down the road if the combination of the shadow banking problems and the property sector problems come together over the next 18 months or so. With the Chinese economy now having become the second largest in the world, the consequences of a hard landing in China are far greater than it would have been before the global financial crisis. The implications of a hard landing in China, which pushed Chinese economic growth below 5% per year for at least 1 year or perhaps even 2, would have very negative consequences for the rest of the global economy. And in particular, many Asian economies would be hurt very badly. In the last decade, many Asian economies have seen an increasingly large share of their total exports going to the Chinese economy, in line with the expansion of China and the rapid growth of Chinese industrial demand and consumer demand for their products. For example, for Australia, for South Korea, and for many ASEAN countries, China is already their largest export market. So if we were to see a hard landing in China, this would not only pair global growth, but it would also have a significant downward impact on economic growth in a number of the countries in emerging Asia, and also for Australia, which is a large exporter of commodities. The shock waves to the commodity markets would be very significant if we were to see the Chinese economy go into a hard landing, because it would significantly curtail Chinese demand for commodities in base metals, in agriculture, and other commodities as well. I think for Australia, this would be particularly a negative scenario because it's so dependent on commodities. And other commodities exporting countries would also be in a similar situation. But I think the consequences throughout the industrial supply chain would also be very severe because many Asian economies are part of an integrated supply chain for manufacturers, with China taking a central role in that overall demand and supply chain linkages. So if we were to see domestic demand in China weaken, this would have negative consequences throughout the Asia-Pacific region.